Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss some group discussion topics related to the internal promotion examination for banks. Today marks part 14 of my Path to the Corner Office series. Parts 1 through 13 have already been published and are available for interested individuals to explore. Bank promotion exams are the pathway for banking professionals to pursue career growth and advancement within the banking sector. Each public sector bank organizes these exams internally, allowing individuals to demonstrate their skills, secure higher positions, and benefit from increased responsibilities and rewards. Bank promotion exams are organized by banks and financial institutions to evaluate, identify, and promote deserving employees to higher roles within the bank's hierarchy. These exams are usually structured to assess candidates' knowledge, skills, and competencies in various aspects of banking operations, management, finance, and customer service. While the format of the bank promotion exam may differ from one bank to another, it typically consists of written tests and interviews. Now I am sharing some important group discussion topics that may assist eligible candidates. The role of banks in building a self-reliant India, Atmanirbhar Bharat. Contribution to self-reliance, financial support for MSMEs, private sector lending, and promoting local manufacturing. Challenges for banks, managing increased credit demand, addressing financial illiteracy, and risk management. Government and RBI initiatives, credit schemes, moratorium support, and flexible lending policies. Discussion points. How can banks align their policies with the government's self-reliance goals effectively? Cashless economy. Is India ready for it? Benefits of cashless economy: reduced black money, transparency in transactions, and increased economic efficiency. Challenges: digital literacy, infrastructure in rural areas, cyber security, and trust in digital transactions. Government push: Digital India, UPI, e-wallet incentives, and reduced MDR charges for small merchants. Realistic vision: can India realistically become cashless soon, or is a partially cashless approach more feasible? Social media in banking, a marketing tool or a security risk. Benefit of social media in banking: direct communication with customers, brand building, and promoting financial products. Risks: information security, spread of misinformation, data privacy concerns, and reputational risks. Best practices: social media guidelines, monitoring accounts, responsible communication, and quick response to queries. Discussion points: should banks have really heavily on social media for outreach or use it selectively? Blockchain technology in banking, boon or challenge? Advantages of blockchain: transparency, faster cross-border payments, secure transactions, and reduced fraud. Challenges: high implementation costs, regulatory uncertainty, lack of expertise, and potential job shifts. Current applications: international remittances, trade finance, and know your customer protocols. Future prospects: will blockchain revolutionize banking, or are there too many hurdles for adoption? Impact of interest rate changes on banking operations. Effects on loans and deposits. Interest rate changes impact loan demand, deposit rates, and bank profitability. Impact on customers. Lower rates benefit borrowers, higher rates benefit savers. Banks adoption. Adjusting lending portfolios, exploring non-interest income resources, and managing risk. Discussion points: how should banks balance interest rate impacts on both depositors and borrowers? The need for rural banks in achieving inclusive growth. Importance of rural banking. Financial inclusion, agriculture financing, MSME support, and rural development. Challenges. Low infrastructure, high operational costs, seasonal incomes, and limited financial literacy. Banking initiatives. Regional rural banks, RRBs, cooperative banks, financial literacy programs, and mobile banking. Future of rural banking. Can digital and mobile banking substitute physical rural banks, or do rural branches remain essential? Role of financial literacy in preventing banking frauds. Importance of Importance of financial literacy. Empowers customers to make informed decisions, reduces susceptibility to scams, and builds trust. Challenges in financial literacy. Low awareness, lack of financial education in schools, and complex banking terms. Bank initiatives, awareness program, online resources, customer helplines, and simplified documentations. Discussion points. Should banks invest more in financial literacy to reduce fraud, and what are effective ways to do so? Women empowerment through financial inclusion. Need for financial inclusion. Empowers women, reduces financial dependence, and promotes entrepreneurship. Challenges faced by women. Lack of access to banking services, limited financial literacy, and socio-cultural barriers. Bank initiatives, specialized savings accounts, loan schemes for women, self-help groups, SHGs, and financial education. Future prospects. How can banks further support women's financial independence and promote gender inclusivity? Is customer data privacy compromised with open banking? Benefits of open banking. Promotes competition, enhances customer choice, and leads to better product offerings. Risks: data breaches, unauthorized access, privacy concerns, and customer trust issues. Regulatory framework: data protection laws, GDPR-like regulations, and RBI guidelines for customer data sharing. Balancing act: should banks limit open banking to protect data or embrace it fully for customer benefits? The role of technology in enhancing customer experience in banking. Positive impacts of technology: convenience, 24 into 7 access, quicker services, and personalized banking. Challenges of digital transformation: cybersecurity threats, digital literacy, and risk of overdependence on technology. Tech tools in banking: AI for customer service, data analytics, mobile banking apps, and online financial services. Future perspective: should banks prioritize technology to enhance customer experience or balance it with human touch? How effective are mergers in reviving public sector banks? Benefit of mergers: increased capital base, operational efficiency, better customer service, and competitive advantage. Challenges: cultural differences, managing redundancies, integration costs, and possible job cuts. Government strategy: creating stronger entities to address NPH, improve profitability, and ensure better governance. Long-term effectiveness: are mergers the best solution for public sector banks, or should other reform measures be considered? Role of banks in promoting startups and entrepreneurship. Importance Importance of supporting such startups drives economic growth, innovation, job creation, and global competitiveness. Challenges for banks: high risk of defaults, limited collateral from startups, and long gestation period for profitability. Bank initiatives: priority lending for startups, collateral-free loans, venture capital funding, and government schemes. Discussion points: can banks create an enabling environment for startups, and what tailored services can help? Do India's banks need a stronger internal audit system? Importance of internal audits: identifies risks, prevents fraud, ensures compliance, and maintains operational efficiency. Current challenges: under-resourced audit departments, outdated audit practices, and limited scope in risk management. Solutions: enhanced focus on real-time audits, automated audit tools, regular training for auditors, and stricter regulatory guidelines. Discussion points: should banks invest more in strengthening internal audits, and what improvements are necessary? Role of banks in achieving the Sustainable Development Goals (SDGs). Contribution of banks: financing sustainable projects, promoting green finance, and supporting eco-friendly businesses. Challenges: profitability concerns, lack of awareness, high cost of sustainable projects, and regulatory requirements. Opportunities in green finance: green bonds, sustainable investments, and low carbon financing options. Long-term view: how can banks integrate sustainability into their core operations while balancing profitability? Role of banks in tackling the NPA crisis: understanding NPAs, high level of bad loans affects the profitability, capital adequacy, and operational capacity of banks. Challenges: difficulty in recovery, political influence, and legal constraints. Strategies to tackle NPAs: resolution mechanisms, asset reconstruction companies, stricter lending practices, and monitoring. Future focus: can banks realistically reduce NPAs long term, or are reforms at the policy level required? The growing role of artificial intelligence (AI) in banking. Benefits of AI: enhanced customer service through chatbots, fraud detection, predictive analytics, and credit scoring. Challenges: high cost of implementation, data privacy, algorithmic biases, and dependency on technology. Current applications: AI-powered virtual assistants, customer insights, loan approval processes, and risk management. Future outlook: will AI replace traditional banking jobs or complement human expertise in banking? Importance of risk management in modern banking. Risk factors: credit risk, market risk, operational risk, and cybersecurity threats. Current measures: regular risk assessment, internal audits, compliance checks, and some advanced risk management tools. Future strategies: adoption of data-driven risk assessment, continuous employee training, and scenario-based planning. Discussion points: how can banks balance risk management without affecting profitability and customer experience? Impact of remote work on the banking sector. Benefits of remote work: flexibility for employees, cost savings, access to global talent, and increased productivity. Challenges: data security concerns, lack of in-person customer interaction, and work-life balance issues. Hybrid model in banking: balancing remote and in-office work, using secure technology, and maintaining regulatory compliance. Long-term view: will remote work be sustainable in banking, or is physical presence still essential? Impact of financial inclusion on economic growth. Benefits of financial inclusion: empowers low-income households, supports small businesses, and reduces poverty. Bank initiatives: opening zero balance accounts, mobile banking, priority sector lending, and rural outreach. Challenges: lack of infrastructure in rural areas, financial literacy, and operational costs. Discussion points: how can banks play a more active role in enhancing financial inclusion? Role of banks in promoting renewable energy financing. Benefits of renewable energy financing: supports sustainable development, aligns with environmental goals, and creates green jobs. Challenges: high upfront costs, technology risks, regulatory issues, and long payback periods. Bank strategies: green bonds, low interest loans for clean energy, and collaboration with renewable energy companies. Future prospects: how can banks encourage sustainable projects without compromising profitability? Does India need a central digital currency? Advantages of digital currency: increased transparency, reduced cash management costs, and efficient cross-border transactions. Risks: data privacy concerns, potential for cyber threat, and impact on traditional banking. RBI's perspective: the Reserve Bank stands on central bank digital currency as a means of modernizing the payment system. Future implications: can digital currency support India's financial ecosystem, or is it too early to adopt? The role of banks in enhancing the startup ecosystem. Importance of startups: drives innovation, job creation, and economic growth. Challenges for banks: high risks associated with startups, collateral-free lending, and long gestation periods. Support measures: priority lending, mentoring services, co-working space financing, and partnership with venture funds. Discussion points: how can banks provide tailored services to nurture and grow the startup ecosystem? Has the Indian banking system recovered from the demonetization shock? Impact of demonetization led to digital payment adoption, cash shortages, and increased banking digitizations. Current state: revival of cash usage, challenges in digital marketing literacy, and changing customer preferences. Long-term changes: shift toward a cashless economy, improved tax compliance, and financial inclusion. Future view: has demonetization achieved its long-term goal, or additional reform needed? Importance of financial literacy: helps in better financial decision making, early investment habits, and reduced fraud risks. Challenges: lack of formal education on finance, limited awareness of banking products, and technology dependence. Initiatives for youth: financial workshops, collaborations with educational institutions, and student banking programs. Discussion points: how can banks engage young people effectively to instill good financial habits? Challenges and opportunities in expanding banking services in the Northeast India. Current scenario: limited branch network, infrastructure challenges, and low digital penetration. Opportunities: untapped markets, potential for tourism and MSMEs, and governmental support for infrastructure. Bank initiatives: mobile banking with units, partnerships, local cooperatives, and microfinance for small businesses. Discussion points: how can banks expand effectively in remote regions while maintaining profitability? Are digital banks the future of banking? Benefits of digital banks: lower operational costs, 24 into 7 service adaptability, and personalized customer experience. Challenges of regulatory compliance, cybersecurity threats, and lack of physical presence. Current trends: rise of neobanks, mobile banking apps, and cashless transactions. Future vision: will digital banks replace traditional banks, or will both models coexist? Are bank charges justified? Purpose of bank charges: covers operational costs, incentivizes digital transactions, and prevents account misuse. On concerns of customers: high charges for basic services, lack of transparency, and impact on how income groups. On low income groups, discussion points: should banks reconsider their fee structures to be more customer friendly, especially for essential services? Thank you very much for your patience.